it's your boy Dom. I'm back with another video. Today's video, I want to give you an easy scalping strategy using institutional order blocks and identifying the most likely next draw on liquidity. Okay, so in this strategy, we're going to be looking for order blocks on either the 15 or the 5-minute chart. And we're going to be using a low spread pair. And I recommend this strategy on something like Euro USD or USD JPY or UCAD, something, one of the major pairs that has low spreads. Okay, because what you're going to try to do is get sniper entries using tight stop losses to capture, anywhere from 10, 15, 20 pips, okay, within a session. So you're trying to be in and out, all right? And so you're going to assume you've done your top-down analysis and you kind of have an idea of where prices, overall, what prices want to go to. So you're going to identify the market profile, right? What we see here, we had accumulation, we had the manipulation to the downside. So we had the market maker sell model here forming. And so here now we're anticipating, as this is the sell side of the curve, that the buy side of the curve is gonna happen here. So I'm already looking at Monday's high of the day as a potential target, but I'm looking at these next potential draws on liquidity. Okay, and so it's midnight already, and my eyes is going to immediately go to around here for where price could most likely reach to. All right, and I mean, you have these relative equal highs basically. The price could most likely draw up to, which you also have you have an order block here. I'm sure if we go down to like the 30-minute or the hourly, this would be one order block. So that's where I would be looking to take price just for this session. But for this session, I'm looking to capture anywhere from like I said, 10 to 20 pips. So I don't have to have this total range. It's good to know what the total range is from where prices is at currently, but let's go through it and see what happens. So during the London session, I would recommend do this through the New York kill zone. Use London as like a framework to see if we're going to have a reversal or potential continuation. All right, so we'll let London play out just to get an idea. Okay, so London is here, right? And so far we hadn't taken out that high. Right, it looked like it wanted to reach up. It took out. We know it did take out the Asian high, right? And now it's looked like it's coming for that delayed protraction during New York to take out. It took out the Asian low. Okay, and so we're just gonna play this out. So it takes out the Asian low, right? So now let me go back. That happened pretty fast. So we see so we see this down candle. All right, so you have to be kind of fast with this one. So we're going to look at this order block. Order block is valid once in this instance, a bullish order block. Once this bullish candle closes above that previous bearish candle, we can consider that a valid order block. All right, now this is taking a very aggressive approach, so like that's why I recommend using a pair with low spreads, because if we're going to look for entry at that top wick or even at the body, I would take it at the top wick, and I would put a relatively small stop loss like right below this order block potentially. So like, maybe a 7 pip stop loss just right below here. That's where my stop loss would be. Okay. And we're going to play this out. So boom. So as soon as this next candle comes in, and I'm talking in real time, you're going to do a market execution. This is not like a pending order. You're going to take the entry soon as price hits that, either that wick or within that body, right? It came very close to hitting the body, but it hit it, right? And we got an immediate reaction. And so price, it came back to it. I wouldn't take it a second time. And I actually, it hit our target, right? But me personally, I would have been out as soon as, I would have started to scale out as soon as they hit 10 pips. It hit our target for 15 pips. Definitely got more than that. Came up, it broke London's high, and then it reached up, and it took out this high. Came into this order block, and it looks like it want to continue to reach up. So yeah, it looks like it may have. Oh no, this may be a whole order block here on an hourly chart. But yeah, so that's pretty much how you would like to play this out. Now you can also see here. Let's see. I saw potentially here. You could have maybe taken it right here, right? As soon as like price is moving. Like, this is a play that you gotta run in real time and just do these scalping drills on these order blocks. They happen and they appear damn near every session. You just gotta be quick and identify them and be in and out. Like, this is an in and out strategy. It's not like it's nothing that you have to. Number one, you need to know your directional bias. You need to know London has to play out, so you kind of have an idea of where we're headed to next. Where's the next draw on liquidity, preferably, and we're gonna get in right, like around that opening between 7 to 9 o'clock, and you're gonna just get in, find, like, as soon as you get a confirmation, whether it's a bearish or bullish order block, you're gonna take an entry, you're gonna write it out 10 to 15 pips. So it's just a quick tip, quick video. Keep it short and sweet for you guys. Till next time.